So you want to talk about refinance, right?
I want to talk about refinance because it's really come even more on the forefront lately, Todd, and I'll kind of tell you why that is. And, it may even speak to, the first kind of segment that we did. We were talking about the Bank of Canada. We were talking about inflation. A lot of clients are refinancing to better their financial position right now.
Right.
And, people do refinances all the time to clean up debts and all this stuff. Like, yeah, that's normal. But some people are doing it to be planful and taking control of their finances. Proactively.
Yes.
And some of it's midterm, Todd. Some of it's midterm. Some of it is, at renewal. But what people are doing, a lot of borrowers are extending their amortization. So I have a lot of borrowers who have like 10 years left, 12 years left, 16 years left, 20 years left, and they're pushing back to a 25 or a 30-year amortization to bring down their borrowing costs. Mm-hmm. Not forever, Todd, temporarily, until some of this inflation gets under control. Some consumers, obviously, we're all feeling the pinch. We're feeling the pinch at the pumps. We're feeling the pinch at the grocery store. And they're extending their amortization to bring down their mortgage payment. Obviously, it may keep their interest carrying costs the same. It might increase their interest carrying costs, but they're increasing their amortization to bring down the amount of principal that they're paying. And it's going to reduce their monthly output and leave more money in their bank account to deal with, the consumer goods that are, obviously more expensive now than they were before. Yeah,
this is something that at one point people didn't look at as, I guess it was always an option, but it was considered a step backwards.
Taboo, I guess,
right?
Maybe
It would have been a step backwards, right? So why do you think that we've had that shift?
Because I think people are becoming more financially literate, Todd. Yeah. Obviously, we've talked about this a lot on our show, and financial literacy is huge. But I think people are worried. They're seeing how quickly inflation really got out of control. Mm-hmm. And dealing with something with their mortgage is something within their control. And I think it's really very savvy and smart consumers that I'm having these conversations with. Very educated people. I'm talking about like doctors and lawyers and things like that. And you think, oh yeah, these guys have all kinds of money and, inflation is not going to impact them. It impacts everybody. It doesn't matter what your annual income is. Mm-hmm. Inflation is impacting everyone. And some people are doing this as really a part of their financial plan. And they say, hey, Clinton, I'm going to do this for 5 years. And you know what? If inflation gets under control, I'm going to do a payment increase, or I'm going to do a lump sum payment. Some other consumers that we're having conversations with when they see what's going on with the interest rates and obviously the Bank of Canada, some borrowers are choosing to do a payment increase. Mm-hmm. They're like, okay, the cost of interest is going up. I'm going to increase my payment. I'm going to double down with the effort to pay down the debt a little bit faster now than I did before. So there's kind of two schools of thought, but I think it's certainly a really important time right now, Todd, to look at your whole finances and see really what's going on.
It's important, I think, that then when people are going to take equity out of their house, mm-hmm. if they have some urgent needs infrastructurally with their house, they also take care of that.
Oh, that's
right?
a priority.
Because you can pay off debt, you can do it, but if you've got a bad roof or if you got leaking this or you got a bad furnace, you have to protect that asset.
Yeah, exactly.
Right?
And if you don't have the asset protected,
right, what's the point?
It's really going to go down in value.
Yeah.
Now, I think you mentioned to me that you might have a bit of a story.
I do. Well,
there
I'm showing you the picture of it.
I'm looking at a photo. Well, that looks like a very nice chimney.
That's a nice chimney, right?
I'm guessing that this might be new. Is it?
That's new. That cost me about $2,600.
Wow. Okay.
Right. But the point is, I guess what I'm getting at is that that's not a sexy upgrade to my house, right?
You know what? You don't even really see it. You probably park your car out in front of the house and go in.
So I could have spent the $24,000 on whatever aesthetically, but I guess
you could have a new stove or a new fridge.
Exactly. So I guess my point is that people need to, in my opinion, you're the expert, so I want you to weigh in on this, and I'm sure you have these conversations with people. Take care of the stuff that needs to be taken care of.
Even if it's not sexy.
Right? The shiny stuff will come after that, right?
I think foundation is huge. I think roof is huge. And what we call that is the envelope of your home.
Right.
And if the envelope isn't good, you're just putting lipstick on a pig, really, mm-hmm. otherwise. And I think, roof is really, really important. And sometimes people neglect these things.
Do you think they just don't know or what?
You know what? That's more of a maintenance issue than maybe a capital improvement.
Right.
That's not maybe something that's going to give you a return on investment, Todd. But guess what? That is something that's going to protect your investment. So I think when you're doing a refinance, thinking about things like that, I think consumer debt is huge. I think having a conversation about the amortization is very, very important, and what improvements can protect your investment, but also improve your investment.
Yeah.
Because you've done a lot of work at your house.
I've done a lot of work, and it's all just been a result of the work that you've done with me. I paid off some debt. I'm completely debt free now, except for a car loan and my mortgage. And I've had
and you're always gonna have a car loan.
And I'll always have a car loan. And I'm putting the money back into the house, and it's amazing.
I would be very curious to see, because we know how much your home is worth.
Right.
Obviously, it went up significantly since you bought it.
Yeah.
I'm interested to see, now that you've done some of these renovations, how much that house is worth.
Right.
Because I bet you've increased the value of your home probably $2 for every dollar you put in.
Exactly. That's right.
Which is pretty exciting.
It is. So I'm not saying this stuff to brag or whatever. I'm saying that
well,
it's...
we a lot of our listeners are homeowners.
Exactly.
You know what I mean? So,
Yeah, that's right.
this is just like the real life.
Yeah.
I bought and sold and traded like so many properties, Todd, like over the years. And a lot have been really, really good investments, and I've made money. Yeah. The thing is, when it's your principal residence, if you live in it long enough, there's no capital gains. It's a really good investment.
Yeah.
And often in cases, this home is a family's biggest asset. And, it's your biggest asset. And,
it absolutely is.
Obviously the mortgage is your biggest debt. Yeah. And that's, really what you're focusing on paying down. But, if you don't get into that property ladder, it's really hard. I think in general, like, Canadians aren't great savers. Mm-hmm. I think they save.
Who can be now with the way things cost?
I think they were a little bit better over COVID because, they weren't going out, they weren't shopping, they weren't vacationing. But now with this flood of, money into the marketplace, that's what's really increased inflation. And just to circle back and touch on the Bank of Canada, they really did give a clear message for Canadians to stop spending. But when you're spending on something like your home and you're improving that asset, I think that's a good investment.
Yeah.
And like the money that you spent was really good and planned out. Mm-hmm. You know what I mean? I think sometimes when people do renovations, they want to do some of the nice to do things.
Right.
And I think the needs to do are certainly number one.
Yeah.
Nice to do number two, but you need to work within the budget. And as we know, with inflation, things are more expensive.
Yeah.
And you really need to know what your budget is and work within that.
Should people potentially, because inflation is high, take some of that money and say they're going and perhaps wait it out, see if prices will come down? Contractor availability might be better in a year from now or whatever. If something's not net, you don't have to spend the money, I guess is what I'm saying.
Yeah, I mean, maybe putting the money away, it can be a good thing. But what is the future value of money? Is it going to be more expensive in a year?
Right.
I don't know.
Yeah.
I think the other thing is I have so many clients, and it just kind of like, I want to shake them sometimes. Sometimes they'll improve the property and then they sell it.
Yeah.
Why not have this property improved and enjoy it while you own it and while you live in the property? Yeah. So that's sometimes this drives me insane because I see these people and they're like, you know what? I worked all my life to pay down this mortgage. Now I want to do a refinance. I'm going to pull some equity out. I'm going to renovate it. Then I'm selling it. But why not have done that 5 years ago or 10 years ago and enjoyed it and had your property kind of appreciate that? Yeah. Because, I think there's a balance between paying down the debt and having a quality of life. Yeah. And I think that's a hard balance, it's hard to always find that balance. And I think it's really hard to find that balance right now. And I think that's why we're seeing some consumers going with longer amortization. Yeah,
here's a quick question for you. If you own a condo, are there does that make it more problematic at all to refinance? Because
it depends.
A lot of the work gets done by the condo board, right?
Yeah, so it depends on the square footage of the condo. That's kind of the big thing. Yeah. If it's a micro condo, not every lender will entertain a refinance. Right. But if it's a decent size, if you have like a 2-bedroom, 2-bath condo type situation, usually it's no problem. We refinance condos all the time. If you're doing any renovations within the condo though, Todd, you may need the approval from the condo corp, even if it isn't within your 4 walls, because there's things like debris and noise, and you need to have special approval to do those type of things. So
duplex, same thing, I guess. You've got infrastructure, shared wall, shared roof.
You don't necessarily need approval from your neighbor. I think it's probably the neighborly thing to do.
Yeah.
I certainly have seen a lot of duplexes where, one's white and one is gray and, it looks a little bit strange and it doesn't really match up. It's the same thing like when you have a shared roof. It's like, it looks kind of weird when there's two different colors. Like get together and do it all. And
it's not the right way to do it anyway.
No, exactly. Yeah. It's always better if you are really probably close with your neighbors if it is a semi-detached home. Certainly there are a lot of semi-detached and townhomes here in Nova Scotia and Halifax. So, we do see this quite a lot.
Yeah. So what advice do you give people when they're going to do a refinance? There's a lot of things that they should get and can get in order to speed up the process, right?
Well, I think having your income documents together really, really important. If you're employed by an employer and they're taking deductions at source, we typically will ask for a pay stub in your last 2 years of T4s just to see kind of where your income is. If you're self-employed, we typically ask for 2 years of your tax returns. There's lots of solutions for different scenarios, but that's kind of like the general stuff that we'd ask for. We would also ask for last year's mortgage statement and your current property tax bill. So those are kind of the initial documents that we would get. We love to look at what the property value is, so how much the property would sell for today in this market. And I know James talked about that. The average house price in Halifax is around $500,000. You typically know how much your home is worth. Yeah. You're watching your neighbors and you see kind of the homes that are selling. So have an idea about the market value, and then have an idea about what you want to do. Yeah. You know how much you owe. We can certainly look at the liabilities and make a recommendation, but have a rough budget. And I always tell people, if you're doing renovations, go with the high end of the budget. I talked to a customer today. They're like, we're not sure if we're doing a $15,000 renovation or a $25,000 renovation. I'm like, this is really easy. We're going to get you $25,000. Yeah. And if there's extra money left over at the end, we are going to do a lump sum payment back down onto your mortgage. It's always better to have more than have less, because what happens when you have less? You're borrowing it on a line of credit. Yeah. Or maybe a more higher cost credit facility like a credit card or a loan or something like that. So that's certainly something to think about.